These are things that are just imperfect with the market. But over time, you're going to start to see that you can start to feel the pulse of the market. It's like, I understand I'm in the uptrend. I understand the concepts of this 60. And here's another example, just not to say, market's in a nice uptrend. I can't write on this chart, but if I would put a trend line under here and kind of on top here, and then it kind of topped out up here. But what's happening is, you see the bottom stochastic and how it's embedded up there? You only get that look during this type of market, an aggressively strong market. If you could recognize that, you could make a lot of money.
So now, once again, with John Kurisko. The man is back on the podcast. Good to have you here, John, today. We had a few videos together that performed really well. I think you always like shared a lot of value, share your stuff, share how you trade. You've been living in the market for multiple years now and kind of doing this every day too. So welcome back on the podcast. Good to have you here today.
Oh, it's great to be back at the end. I'm so excited. I've been preparing this because I've gotten so much good response from your podcast. And I thank everyone out there for the great comments. I've been reading the comments in the last video. So I would first say, prerequisite to this video is to watch the last video, because a lot of the material that I went over, it's very important. That's basic material. I want to bring it up a level this time. So we're going to add some things to that. I want to go back and kind of review the important things and cut it in, because what I noticed was, from all those people that came and started learning the methodology, I got a lot of questions on certain things. So I'm answering all those questions. So this is the first time I'm going to release some of this stuff. There's two great techniques that I didn't cover the last video. So I want to do those in detail today. So that's what I'm here for today. I'm excited.
Awesome. By the way, we'll leave the interviews we did last time linked below the video, so you guys can check it out and go watch the interview. It's been a lot of massive stuff. It's been John releasing and kind of talking on his strategy step by step and everything looks at on the stochastic, how to scalp this. So really cool stuff. And today we can go, of course, like you said, beyond. You'll learn a new strategy and how he's doing things these days in the market, and look forward to hear that too.
Well, anyway, just a little bit about myself for those out there. I started trading in 1996. My first trade was in 92. And then I quit my job in 96. I was working at the post office. It was we went over this in some old videos too. And it was a great little ride. I quit $12,000 and I started trading, trying to learn how to trade. And this is back in the days when the internet was just coming on. I was using the Mozilla Netscape browsers, and we were dialing in to get our trades going. We had our commissions were $30 to $40 one side. Now, that's like $80 round trip. And it was different back then. It was chat rooms, a lot of scams, boiler rooms and everything. And, you didn't learn much. You just kind of rode the markets. And that's what most people did. And for probably the first 10 years of my existence as a trader, I didn't know what I was doing. It wasn't really until 2006, which is, what is this? Well, 19 years ago, maybe. All right. That I really started to understand the markets and put all that past, failures and just not having a plan, realizing what I was missing. And that was an organized business plan for the markets, and taking all that information I had and knowing certain things work, but I'm still a gambler. And I started developing a style of trading that fit my personality, because I was a very reckless trader. I would chase the markets on a dime. I would overtrade. I had no discipline. And the more you're in the markets, the more that market's going to probably get you. You're not going to get the markets. It's going to get you. So, I realized the less I trade, the better I would do. And there's a lot of stories between stock trade and option. We're going to focus on futures right now. And I don't want to spend too much time on the past. I want to show you how to set up the system and take this one good trade here. So let's start off here. The first thing is the market discipline. We talked before, Etienne, and I asked you, I said, if I could show you a setup in the markets that works 90% of the time, but it only possibly comes out maybe 1 or 2 times a day, and it requires you to sit in front of the computer and wait for that, would you be able to do that? And you said, no, it's not worth my time. My time is more valuable. And exactly right. That's true. You have to have the balance to be a successful trader. I could show you what works in this market, but unless you're there in front of it, when it's happening, it does you no good. And that's a problem with a lot of traders. And I wrote this down, and I said, let me write this down. What am I saying? I said, you know what? You can't trade around your life. And every time I coach someone, I always ask them, how much time do you have to trade and stuff? Well, I get the kids off the bus at 9:30. I'm in front of the computer 11 to 1, and then I'm doing this and I'm doing that. And I said, oh, all right. So you're trying to make money between 11 and 1. Well, what if there's no setups there? What do you just find? What's your business plan? What's your plan of action? What are you looking for? No one knows, And if this is not the mental fortitude or the capacity or the characteristics of a winning trader. The winning trader is going to have a battle plan. He's going to know exactly what to do. It's going to be a piker in the market. He's exactly know when he's going to get in and when to get out. And I realized that was the change in me when I started doing this in and out, finding the most important part of the market, the pivot areas in the market, taking those trades and taking them off at a key level, which I will describe. That's new information too. So you can't trade around your life. You must design your life around trading. All right. And that's a hard thing. That's going to knock out over 50% of traders right there. So now we're down to the last 50%. Most traders will overtrade for whatever emotional reasons. We're human. I overtrade sometimes. You go off tilt. You're not perfect. And because of that, you're going to have losses. But if you develop your strategy and understand that and give yourself, every business has losses. Every business has profits. As long as your profits are ahead of your losses, that's what counts in the business. So you can approach trading like that. And I do. All right. So we're going to get into the methodology now. You're going to be trading. We're going to be just to break down the method. We're going to be trading 1 to 5 minute time frames. So basically our trade is going to be, we're going to be in our trade between 1 minute and 5 minutes, about 5 minutes in a trade. That's not bad for a scalper. It could be longer, and that's going to be based off one of the indicators we're going to look. If that 60-10 indicator is really going to help me decide if I'm going to stay in that trade longer or I'm going to get out. On average, you're going to get about 5 to 7 setups a day on this type of divergence stuff that you're going to see. But this is the important thing. You have to wait until you have a recognizable channel and a quad rotation. And that's what we're going to learn today. We're going to go over the quad rotation and the recognizable channel, and then we're going to add why we're going to get out, and there's other things. So that's the main thing we're going to learn. How to recognize the channel. Do you have a quad rotation? What does that mean? And then is there a divergence there? All three of those things that happen right there are ultimate super signal. And we want to take that. But if that comes out at 11 o'clock and it comes out at 2:30 and there's one at 4 o'clock and you're not in front of the computer, it doesn't do you any good. This will work. But you have to be committed to take this. And if it doesn't work for you, that's fine. That's fine. That's a decision everyone has to make. But it's not like you get up every day and hit a home run. It takes practice to be professional. It takes practice and dedication and discipline and patience to be a successful trader. And it's just too much money involved for anything other than the best to make money.
Before we go into the strategy itself, I'm kind of curious to know why you like the 5 minute chart so much. Why not like a 1 minute, or why not like a 1 hour?
I do trade the 1 minute. Let's just show you what I do. This is the 1 minute time frame. Now, the 1 minute time frame, of course, each candle is formed after a minute. And what you'll notice this is just Friday or today or yesterday. This is my markings and this is how I trade. So what we do is we're identifying basically the trend, and the trend's usually going to have a range bound trade. And we know that by what's called the 1, 2, 3 pattern. Now, just take it that if you know a little math, it's, you might have, let's say you have a point here and you have a point here, right? And that point, it represents just 2 points, but you have to have 2 points to make a straight line. So basic math is that you need 2 points to make a straight line. That, in fact, is actually one side of a channel. And now if you have another point or another, what I call a pivot, manipulate my thing, it doesn't matter where it's at, but it's usually actually going to be underneath the 2 on one side. That is called a 1, 2, 3 channel. What you do is you take your channel, you clone it, and you drop it down to the third pivot. Now, this is before the channel even forms, but you know where the channel is going to form now because you've already been able to identify it by 3 pivots. So when I identify a channel, and there's reason, and you might say, well, this channel is all over the place. How do I know where to put my candles? Where do I put my trend line? Now, there's rules for all this, and it's just something you have to learn. In the market, when you have volume coming in and usually get an overshoot, it's always about the bounce and the retest and where it settles in. like the opens, close, or any type of news that comes out will usually move the market aggressively through an area. And that's sometimes hard for a trader who's learning a style, and all of a sudden that style gets messed up. But you have to kind of realize, all right, there's a reason why that messed up. It resettles in. The great thing about trend lines is that algorithms pick up on this. So we have 3 lines, and now we have honestly, we have a nice channel. And this channel, even though the price might be going up here, the price might be going up and coming down inside that channel, right? It came down and then it went back up, and it's coming. That's probably going to be the range of this channel. And we'll start to see that. So each time the price gets up there, we're going to be measuring it. This is on the 1 minute time frame. We're going to be measuring it with what's called the 9-3 stochastic. This down here is the 9-3. Now, the 9-3 stochastic is a George Lane oscillator. He invented it in the 1950s. And I went over this, and this is an important concept, so I want to go into detail on this. The stochastics I have 4 bands here. Typically, they have 2 lines. You could see if I overlay my mouse on that, you could see the second line underneath it. And one's called a percentage K line, and one's called a percentage D line. Percentage K line is the amount of periods it goes back and counts in the formula. So if it's 9, it would take 9 candles of data, basically, and each of those 9 candles would be added into the formula. And then the 3 are actually there's a percentage K and a percentage D. The D line is actually a little moving average that smooths it over. It smooths it out by a factor of 3, and then it prints it or plots it using the same D line. It plots it on a graph between 0 and 100, and that graph between 0 and 100 represents how many, that one major candle that encompasses the last 9 highs and lows. And if we're trading at the high of the last 9 periods, we're going to be up around 100. If we're trading at the low, then we're going to be so it's the momentum as it continues to climb. It's the momentum that's being measured with stochastics. And George Lane didn't make it for an overbought or oversold, but he meant it. And I want to jump over to a slide here. George Lane meant it to represent the energy of a rocket. So the rocket's going up, and what happens is the energy drops off on the rocket. You could easily, if I was measuring a stock going up, I would measure the height of how far the stock went up and the energy behind what was pushing that stock. And you can't really measure that by looking at your eyeballs, but you can measure it with the oscillators. The oscillators are actually measuring momentum based off the previous candles, and those candles are slowly turning over even though the price is going higher. So the engine is cut off, but as anything has momentum, it's going to go a little bit higher and turn it over and start coming back down. That's what stochastic divergences tell us. They tell us exactly when we start to top out. And I used a 1 minute time frame on this, right? What we were talking about to identify that. But remember, I have the 9-3 stochastic. 9-3 and 14-3 are your most common stochastic parameters. You'll see these defaulted on a lot of charts. So if you grab to whatever chart you're using and you go to stochastics, you're going to see a bunch of them. You might see full stochastics. You might see fast stochastics. You might see fast, full. There's one more, slow stochastics. Each one came after the fast. George Lane developed fast, and then he said, all right, we're gonna add another moving average to it, and now we're gonna make it slower. And then we're gonna have full, which is giving us 3 parameters, and we can put another moving average on the K line. So they kind of changed it throughout this. But if you could use it and you have the choice, use the fast stochastic oscillator if you have a choice. If you don't, and you have 3 parameters, that K smoothing should always be a 1. All right, because it's going to be used as a 1. You're going to divide by 1. It's not going to do anything. So make sure if you have 3 parameters, it's going to be 9-3-1, 14-3-1, 44-1, 60-10-1. That's what I show that as an example on the bottom because you'll have 3 parameters versus 2. So if you have 3, always put a 1 in the last one. Just a little, not just something that, again, trying to hit questions I always get. So the big thing was, all right, I understand the concept of divergences, but now how do I determine when a channel? So I looked at my chart. I remember when I was developing this. I developed this 2007, 2008. I was looking for reversals, and I said, well, I got my reversal on the 1 minute time frame, but if I could overlay it to the 5 minute time frame and have a reversal on the 1 minute and 5 minute and maybe even the 3 minute, that would be even better. And I started doing all the testing and stuff, and I actually started doing visual tests on it. And I had a little a different charting service that I was able to tune the 40 all the bands until they all came into sync. And I realized that the 60 candles really calculated out to be a 5-minute time frame if you placed it on a 5-minute and used a 9-3 against it. And that's very, I can't even explain. It's so deep, this is kind of so deep that I have a hard time sometimes explaining it. But if I were to look at if I would look at the 5-minute time frame now, and I put it on this chart, I can't really, because it messes it up. This 9-3 would be at this level, coming down to 20. So I would know that the 5-minute was oversold. So I know the 5-minute's almost oversold here. It's oversold here, oversold here. This is what I call, or very close to a quad divergence. So this is all our time frames are lining up. Now that alone is a great trade. When all 4 stochastics. Now, when I zoom out of a chart like this, I call it the bird's eye view, because you could zoom out and you can actually take a look and I put a yellow line down here on my 20 line. Now remember, the most important stochastic oscillators here is going to be the top one is the 9-3 and the bottom one, which is the 60-10. Those two work well together, all right? The other two is the 14-3. George Lane kept that. I kept it in honor of him. The 44 is something I put to kind of bridge the gap between the 14-3 and the 60-10. It wasn't a 3-minute time frame type of thing, but what I found out is something really big on this. When I got a divergence on when I got a 44 divergence, when the market was coming a little lower, and this gave us our divergence signal, it would never fail. It was a magic thing. Like back here, this is actually I'm showing you one right here. So I'm looking at the market coming down in a trend. All right. And what we're watching is, I'm getting into the technique a little. I'm watching all 4 stochastics. And when all 4 stochastics get oversold, now I'm in what's called my trading environment. That means our 5 minutes oversold, our 3 minutes oversold, and our 1 minute's oversold. And I want the 5 minute to be oversold because, the 5 minute, if a stock rotation on the stochastics usually takes 5 to 7 candles. That means if I trade the 1 minute time frame, my trade is usually maybe 5 minutes long as a scalp I'm trading. And in this environment, if you trade futures, in a minute you could get 10 points now. I mean, the liquidity, the volatility in the market was really extreme, especially today. I was just watching some of these candles that were over 10-point candles in 1 minute, which is extreme because this signal in itself works so well that, you have to understand how important it is, and you can make a lot of money on it if you wait for it. Most people can't wait for this. And what we're looking at is a quad rotation when all 4 stochastics are oversold, and that's just not the trade, actually under the 20 line. When I say oversold, it's all under the 20 line. So that's why I kind of keep a little 20. I want to see a space under there. Now that's just not the trade, but that's beginning of the trade. So when we have a quad rotation, we have half of a super signal. That means all of our time frames are lined up. Now we have to identify the bottom. The bottom comes in, just like a divergence, George Lane said. Momentum bounces, all right, we kind of bounced here, and then we sold off quickly and we retested the lows, but the stochastics turned back up higher. So the momentum shifted, even though the price came back down to the lows. So that was our signal. That's where you buy right there. You buy on that turn back up. You put your stop underneath the lows. Right underneath those candle lows.
What kind of win rate do you expect on these kinds of setups?
I don't believe in back testing. So because the technique requires you to understand the channel. Understanding the channel, the pulse of the market is very important. To be a professional trader, to be someone who's making money each and every day, you have to kind of be in touch with that market. You can't just randomly come in there and understand what's going on, because you want to know where the bigger trend is and what kind of pressures on the market, pushing it up or pushing it down. That way you start to measure it out with your stochastics. There's a lot underlying things, but these setups alone, I would say if you got 10 of them, 8 of them would be in the money. Now that doesn't mean that you're going to make money with them at the end. This is the hardest part of trading. I could show you like the setup, but most people will say, all right, and I want to, again, in the comments, there's one thing I was telling Etienne before. The one thing I didn't do in your last video is answer the comments. So in this video, I want to answer the comments. So if you have any questions or clarification, I want to, this is important stuff. Just ask that question. I'll try to answer it for you. The setup is a visual confirmation. It's a scientific, there's no missing it. All right. So you have to take it. And if you took it each time and there was no news around it or was nothing, it would give you a profit. Most people get in there and they say, or a lot of people I talk to, they say, why? The problem is I get in, but I don't get my target, or it turns over before I get my target. All right. It turns over before I get my target, or I get in too late, or, some excuse like that. And that's because in trading, you have to be perfect. All right. You have to be perfect. The market, you will never buy the bottom unless you buy the fear, meaning we're trained to feel good to get into a stock. The stock probably has to be moving in our direction to feel good about it, And if it's going down, you're scared and you're like, I'm not buying that. But you're never going to buy the bottom if you're away from it. So when you see a setup, you have to jump on it at the bottom. By the time most people are in, you should be getting out. And how to time that is very important because you want to take the decision away from you. The rotation of the 9-3, once it gets above 80, this line right here, you take your trade off. I don't care if it continues to go up here. I don't care. Most likely, it's going to come back down. 7 out of 10 times, it's going to retrace back. All right? 7 out of 10. You're holding on for those 3 out of 10 times it continues because you don't want, you have FOMO, your fear of missing out. And and traders have to get over this. Because if you want to be successful and live the life that you're living, like traveling around and stuff, you have to be serious enough to take your profits when you have. You're going to have profits in all these trades. The thing that's going to stop you is you're not going to take those profits because you're going to be not in properly. It's not going to be enough for you. If I get a rotation, I get an entry and I get a rotation up to 80, and just for argument's sake, I have 3 contracts on and I got a point. And I have like, what is that? $15. And I'm like, all right, I got over. So I'll take that off. I'll take it off because that's the rule. But you know what? It'll probably come back and I'll be down $20. And that's when I'll end up taking it off. And that's how things go wrong. You have to be aggressively disciplined to take the trade on, which is your divergence trade. Now, there's a lot more that, that goes with this. There's this. You have to understand that the channel line is very important. And I always want to make sure the trade is inside the channel. That way, because my job, my product that I'm teaching, or at least I'm trading, I kind of put it into a business way because mentally I could deal with that better. I understand there's a rule book. And if I apply these rules, it's going to take that edge off of me wanting to gamble or overtrade. I know something works. If it starts to get addicting. That's the exciting part of this. Try this and try to not stray from this, because what happens is once you stray from it a little, you're going to stray from it a lot more, and it's going to mess up the statistics. When we go back to your thing, what are the statistics of this? It really depends. If you were perfect in your entries, it would be probably close to 85, 90%. Let's do an experiment right here. I believed in this method, this signal that I developed so much. I built a bot around it. I said, all right, because what was happening is I was missing these overnight. I was dealing with the daily grind of the U.S. markets and the news and the volatility, and that's still very dangerous, because if you're not a perfect entry, you could be up in that volatility 4 or 5 points. You're getting scared out. So I found out that these setups work just as good overnight. Even better because you don't have that news. So I'm just going to we're going to put in Bitcoin right now because Bitcoin's active. This works on everything. It works on Forex. It works on gold. It works. I had a lady the other day, she was in South Africa. We were working on a gold chart. And I was working with her. I said, you know what? I don't trade gold. But after I saw I was showing her the setups. I said, I want to start trading gold. This thing is unbelievable in gold. Anyway, you're probably going to see my indicator start up on this. Now, This measures out divergences by the formula. Remember I said the quad rotation? What do you see here? And again, I have these templates for you. So if people want these templates on TradingView, you'll have some links.
Yeah, we'll put the link below in the description of the podcast and the video as well, so you can just grab it there and hopefully apply this to your own charts.
This is a quad rotation and a divergence. So again, the signal is basically all four stochastics getting under that 20 line, and then a divergence on the 1 minute time frame. That way you're combining the 5 minute bigger entry with the 1 minute timing tool of the divergence. Very, very powerful. So powerful. Now, I don't know what this, I haven't looked at Bitcoin. I see 83,000. So, but I'm looking at the signals. And do you see something about these signals that are on the bottom? Now, I didn't check. I don't know if you could back test this just to see what this is. I don't use this too much. Let me see. It took 156 trades, 98% profitable trades. Now, I don't go by this stuff. I don't believe in this. I don't know what that is even counting. This is the first time we're looking at this. But I was just going to say, but what this is telling me, and I don't have the parameters set up for Bitcoin. This is running the ES. This is running. I want to remember this. Let me mark that down. Yeah, now let me just bookmark that. This is running an ES. This is the signal, but I usually run it on the ES. So if I put this on the ES, you probably see a little bit different. Anyway, the fact is, it's going to give you the great setups, but it requires a great trader to take advantage of that and know when to get out. The easy part is identifying these setups. This is what we call a bottom and a return to the bottom, or double bottom divergence. It's a higher rotation on the 9-3, and all four stochastics here are oversold. That is our super signal. If we come over here, the first thing we want to identify is a 1, 2, 3 channel. Once we have, remember the first thing out of the gate today, we talked about the channel and how to identify a 3-pivot channel. Our job here, and if I would ask you, and I know if you were looking at this chart and you would say, I would say, where do you want to trade? You have 3 trades to take. What trades are they going to be? Hopefully you say, I want to go long here, right around here. I want to go short here, and I want to go long here. That would be a good, acceptable answer. I have 3 trades to take. I want to go long here, short here, long here. That's what I want too. And that's what I realized. I said, that's the only time I really want to trade. I don't want to try to get the best meat. I want to get the whole meat, all the meat from the bone. But I know if I'm wrong, I'm going to have a lot of meat on the bone, a lot. So what was these areas all had in common? And that's when I started putting all our stochastic together. And what I realized is, boom, what do we have here? Well, we have a quad rotation to the sell side now. That means all 4 stochastics are oversold right here. And when we have that, then we have a much better chance of a pullback. But that's not even the guaranteed pullback. The guaranteed pullback comes when the divergence is. Here we come back down. We get the quad rotation. Now that we have all 4, what I'm looking for is that higher low. Price made a low there. And now that I'm oversold, I'm just watching this low and I'm watching this. So I teach for kind of traders who are trading new to the style trading, to respect that 20 line. I like to see our first low underneath the 20, and then it bounces above it, and then it comes back and holds above the 20, even though the price comes back. And it doesn't matter if, there's some things that you're going to learn that are next level. Like, you don't have to worry too much about the tails as much as you want to worry about the bodies and the lowest body. So when we do divergences, we really count the body lows. All right. And if it's a double bottom body, it doesn't matter. Even if this was a big candlestick down there, it doesn't even matter. It's about the bodies. And if the bodies are equal, or the right body is a little bit lower in the higher road, that is a pure divergence. And that is your thing. And then you put your stop underneath that low. All right. And then you're going to see that once you identify a pivot, that the trend, what pivots are changes of direction. So my job is to identify pivots in the market. And to identify pivots in the market, you're going to look for that quad rotation divergence. When you have that quad rotation divergence, you're going to take that trade, you're going to put a stop underneath it. The hardest part of people saying, well, I want to capture all this, or why didn't you leave it on? But there's fantasies out there that people think they could take a trade from here to here and get out and get in here and get out there. That's all BS. You'll be lucky enough to get out with your pants out of the markets. You have to have that. You have to be disciplined. You have to be a professional. This is money. right? This is something you're serious about. You do it the right way, and you have that discipline. I can't stress that enough. So now you start to see that the market shows these patterns. And when you have a pivot, that's usually at the beginning of a new channel. So the low part of a pivot always becomes our first pivot of a 1, 2, 3 channel. So that would be one. And then when the market, we're going to look at micro channels, and I don't want to even go into that, but you're looking for it's hard to, there's a concept that I wanted to introduce for the first time on the show. And before I do that, I'm going to have to go back over here. Let me, this is world premiere stuff right now. But I was realizing, it wasn't maybe a year or two ago, something about the divergence signal. Channel width identification. So the most important thing about this type of trading is understanding that the market moves in channels and directional channels. And our job is to identify when a channel switches from one direction to another direction. And when we have that directional move, like up here, that we had this nice little move up, we had a stage one, we had a high, and then we had a higher high, and we had a high and a lower high on the divergence. That was our divergence right there. High, higher high, low, high, lower high. You see them going opposite, right? It was like something there in front of me for years, and I just never really picked up on it as much. That remember, when we have a divergence, there is a move up and then a pullback, and then a follow-through move higher. That pullback, that first pullback, the low point between the two highs, the higher high and the high and the higher high, the low point between that is our first pullback. If you take the low of that pullback and take the high of the divergence, that will give you the width of the new channel. So in the beginning, we only had one, we had to wait for a 1, 2, 3 channel. Now I only have to wait for 2 points, and I already know how the width of the channel is going to be. And all my back testing, you're going to see it right now. Now, again, you'll have that slide, just kind of identify the channel. Once you have a divergence and you have a low and a lower low, that bounce goes up, that low, that becomes the new channel line. And it's sometimes hard to see if you're, maybe new at trading. But just kind of remember these rules, write them down, soak it in, send me, I'm going to say, send me a chart. I'll confirm it for you. But so I want to go back to the chart there, because I think we're getting a lot done here tonight. So when we have a low and a lower low, that little bounce is the high of that bounce. This lower low is the low, and that's the width. So I would put that automatically. I would put a line up here, even before this is even formed. All right, even if we went all the way over here, and I said, all right, this is the market. We just got a little divergence here, and at this point, let me see. I don't know if you can see it on the edge there. At this point, I know that this is a divergence, and we have that higher. So we go long, and it starts moving up. I have a low, and I have a high. I know that, and there's an angle to this. There's going to be an angle to it, but you're going to have this typically an angle. So if I did all my testing, and just to kind of feel what angles the market usually gives us. And on these divergence, starting a new channel, it's usually above 25 to 35 degree angles on these channels. That means our underlying trend line is going to be at a certain degree angle. And you can see sometimes it's, I think it's between 20 and 30 I pay attention to. Not that, that's just my mind, like just kind of getting all nerdy and stuff. I wouldn't even pay attention to that. But just understand that width, if you extend it out there, you start to look for targets up here automatically. You don't have to worry about it. In this case, it did get up to that level, but you probably could have adjusted the candle here. This looks like a bad candle, and it came right back down. I don't know what that was. It might have been something. And again, the market will sometimes have news out, and you'll see these candles that spike higher and then settle back in. And this is something that you build over time. You're not going to learn to, be a perfect trader overnight, because, you're going to forget some of these things. And some of these things you're going to learn as you continue to learn, basically to continue to trade. So now you see, basically, every time we have, and again, easy enough to back test or show things after they've already happened, but you'll notice When I sit down at my desk in the morning and I'm trading, I'll start to identify these channels. This is what I do every day from 8 o'clock to 4 o'clock on Day Trading Radio. I'll identify these channels, and then I'll say, all right, we have our channel. And I was mentioning this to you at the end. Not everyone could be here. Not everyone could say, all right, John says there's divergence 8:30. The kids aren't getting on the bus. I want to miss this whole thing. Not that it wasn't quad. Wasn't a quad, but it was very close, and it probably was a divergence here because of the slight. Remember, I teach beginners to really look for that bigger bounce. But as long as there's a low and a higher low and a low and a lower low, that's a mathematical divergence. All right. But again, happened at 8:30. Don't want to trade at that point. That's a gamble because that was economic news coming out. So we can't count that as a viable trade. Here, the market's coming back down. Good divergence here. We come down, we bounce, and then we come back down. And you can see we kind of held that low. And right when we turned back up aggressively, and it wasn't a quad, but it was a divergence. Now, quad divergences are our best setups, but divergences must be taken. All divergences must be taken. And we always talk about, like, how do you know when to get out? Well, back here, just for argument's sake, you took that. When this 9-3 rotates up to the 80 line, I don't care where that price is. It's right. In this case, it's right up here. That's what I want to happen. I'm always taking it off because this move right here is almost 80% successful. You're going to get that move. If you're inside the channel, when you identify the divergence, your exit's going to be outside the channel. And if it gets at, half of the things that you're going to be looking at is taking it off into that strength. Remember, you're never going to get the best, highest price unless you're selling as it's going up. You don't, and most traders are going to say, and this is, I got on my notes right here, what's one of the biggest things the traders have? Well, they get in and then they say, well, I put my target here and I put my stop here. All right. And it's starting to go up. And say they got in here. And it starts to work out for them. And it's going up, but your stochastics also rotated up to 80. All right. If that rotates up to 80, that's a warning signal to me that we're probably going to rotate back down. But most traders say, well, I need to get my $200 on this trade. That's not how to trade. You have to take the signal. It's very easy to take the signal. It's all there for you. Everything is there. The whole system is laid out. It's you, the individual trader, that's going to F this up in a kind way of saying it, because you're going to overtrade. You're going to take trades that are not divergences. You're not going to take your trade when it gets 9-3 rotation because you're afraid of missing out. All right. These are all things that traders have to go through all the time. But the one thing that's going to be constant in the market are these channels. And the reason channels is because algorithms are underlying this market, and 2 points make a straight line, and that straight line goes to infinity. And when a price comes down to that, all those algorithms and those supercomputers are all calculated. Well, this is an interesting level, and we know that. And it says, oh, we're going to react, whatever. It's staying within our thing. I'm only looking for one thing. I'm looking for a divergence here. I'm looking for it. And sometimes not every channel is pretty, Sometimes they're not the prettiest channels. But they have a directional means to them. And if you start to see a low, especially on the buy side, you're more concerned with the lower channel line. Your trades want to happen at the lower part of a channel. That's going to give you your best bet of getting a bigger move. You're buying into weakness. You're buying because this is going to show you right here. All right. This low and this higher low is really just an inside the channel, and that high rotation back up. You want to get in, plus the quad rotation. All right. That's really one of the bigger setups, and that's a 5-minute rotation. So if we looked at this chart on the 5-minute time frame, because the 1 minute is understandably, but this would be oversold on the 5-minute, and that would be a good entry either case. But look at all these candles you got. I mean, first of all, let's remember we're in this trade maybe 5 minutes at most. Usually by the time this gets up to 80, I'm getting out, which is guaranteeing me this move, outside the channel. Guaranteed. That's what I want. I want to be walking down the sidewalk, picking up $20, $50 bills all day long.
Are there times where the stochastic wouldn't go to 80? Like it would just keep dropping or stay very low? And how do you get out in that case?
That's a good question. Now, for me, I have rules for everything. I've been doing this for so long. If I see a situation, and I probably, I said, hey, what if I don't get the rotation. What am I going to do? Of course, I have to deal with that all the time. I said, well, I don't have the rotation. You look at your 60-10. If your 60-10 is embedded underneath the 20 line or anywhere close to the embedded line, which means for 3 candles or more, that means that you're going to probably roll over faster than fast. You're in a confirmed downtrend. And if you're down here in this kind of flatlining, your trend is probably very strong to the downside. So if I start to see anything down here and it's not turning back up, like, coming up above the 20 or turning, I know we're looking at this and it's not as clear as day. But for me, there's 2 things I look for. What are we in? Are we in a channel? Maybe this channel is actually could be here. Remember, this was the ugly channel. This channel could actually be out to here. It might be a little bit prettier, and that's probably where it should have been. The rotation here, great question, because that's going to bring us to the next thing. This is what we call a bear flag. And even though a bear flag could end up being a divergence, there's a rule, and I said, what defeats a divergence? What defeats the divergence is a bear or bull flag, meaning you have a low and a lower low and a pop. When it turns, that pop gets overbought and this stays down, that bear flag is going to turn into a flag. It's not going to continue up. It's going to be a flag. Then we set up another bigger divergence. That was our real divergence. But a flag is, if you were going to take this perfect setup, the divergence setup, that was the number one. If you were going to look for a comparable trade to kind of keep you busy, you would do this trade right here. And we're going to introduce this. I didn't talk about it too much on your last thing, so this is kind of new stuff I want to. All right, here it is. There's the question. I knew you were going to ask this question. Divergences are used in a market that is reversing from one direction to another. What do you do when you have a trending market that does not give a signal of reversing? So we have this kind of a little chart here that represents our 4 stochastics. Now remember, if our 60-10, which represents the 5-minute time frame, if we think about our different time frames that we want to pay attention to, the 1 minute and the 5 minute. Think about the 9-3 representing the 1 minute and think about the 60-10 representing the 5 minute. If the 60-10 on the bottom is slightly moving up, that means the big channel is slightly moving up. The 9-3 is inside the big channel. So that's going to go up and down, up and down, up and down as the big channel goes up. So this worked tremendous together. So now you have a 5 minute or a very bullish, that 60-10 represents the 5 minute, a very bullish 5 minute channel. And your 9-3 represents the pullback. When the 9-3 gets down to that 20 line and this stays above 80, and again, this is not an exact science. I apply the same rules I apply in horseshoes and hand grenades. You just got to be close. The thing is, once you start to realize certain things in the market, like the current trend and the relationship of the pullback of the 9-3 as it rotates down towards that 20 line, and this continues to hold strength, this is your stronger signal here. The bigger trend is in charge. These little pullbacks are pullbacks in the bigger trend. When we see the 60-10 stay above that 85 level, it's very bullish. If it's above 90, it is friggin' the most bullish, very, very, very bullish. Now, with a flag, and people, simple thing, but just in case you don't know, some of the people in the audience, a flag is only a flag because it has a flagpole. You need a flagpole for a flag. And what a flagpole is a burst of momentum. And so you need that momentum that really shows the bullishness for a bull flag. And then it settles in. And then we're able to see that short-term momentum get oversold quickly, but the long-term momentum, remember, this is measured momentum. The long-term momentum hasn't even shifted. It's pinned to the highs. That means we're going higher. So all we have to do now is just time this. I love when this pulls back to the 20 and it's just that easy. Sometimes it doesn't get to the 20, just like sometimes it doesn't get to the 80 to take it off. These are things that are just imperfect with the market. But over time, you're going to start to see that you can start to feel the pulse of the market. It's like, I understand I'm in the uptrend. I understand the concepts of this 60. And here's another example. It's just not to say market's in a nice uptrend. I can't write on this chart, but if I would put a trend line under here and kind of on top here, and then it kind of topped out up here. But what's happening is, you see the bottom stochastic and how it's embedded up there? You only get that look during this type of market, an aggressively strong market. If you could recognize that, you could make a lot of money. And how do you recognize that? You have to have your 60. No one else is going to do this. This is my 60, 60, 10. This is a quad rotation. All right. Now it's out in public. But if that 60 is up here above the 85 level, when you get those rotations back to 20, like a bullet, it will shoot higher. It always works until it doesn't. But when I say does it, there's going to be one point where you're not going to get the full rotation. You're going to get the again, with trading, if you can identify a trend early in the trend, the flags tend to be stronger. And as you continue to get longer in the trend, longer in the tooth, actually, you start to flag out longer, and eventually it will break down. So your object is to actually identify these 1, 2, 3. I like to do 2 flags, and then I start getting a little cautious. But it really comes down to the 60-10 here. This is just something that if you have a 60-10 embedded, you get a 9-3 rotation, you're above the 20-period moving average, you take that trade. You take it, you put your stop underneath the, just a couple points underneath this. You're going to know it's going to work. The 9-3, this works. I'm not going to say it's not going to work. Maybe there's some bad news out there. I'm not going to tell you exactly on the flag where you're going to put your stop, but make it relative to what the market is trying to, if it's moving aggressively and giving big candles, then you got to give it a little room,
So as someone that's watching this and kind of getting confused with a bit of everything you share, can you walk us through the strategy and kind of what you would be looking at, where you would buy, where you try to get out, and kind of this all works together?
Yeah, sure. So let's take a look at 3 o'clock. Here's European markets. All right, that's really a good time to trade. I like European markets. This is the opening of the market. So I get in early in the morning, say 8 o'clock, 8, not that early. I'm like, and what the first thing I'll do is I sit down with my 1 minute time frame, kind of go over the news, get a feel of the market, what's up, down, flat, whatever. And then I'll start back, like I'm at this point. I'll go back and I'll just put in fast lines. I said, all right, let me take a look at the market. And then what I'll do is I'll actually put in some lines and see how the ranges are and what works. And just by putting these in, and I know, this is a market opening up. There's a bigger channel. There's a 1, 2, 3 line. I don't want too many lines there. I want to get rid of them so I could show you a little bit better. All right, so just say we're started here in the morning. And we just started off, and let's say I had this 1, 2, 3 channel. Now we had 1, 2, 3. That counts as a 1, 2, 3. 1, 2, 3. Whatever you have the parallel trend line, you grab it and you drop it up at the top pivot. 1, 2, 1, 2, 3, 4, and it gets very close. So now, while the trade is happening, I'm relaxing, I'm hanging. What I'm starting to wait for is when our 9-3, our 14-3, our 44, and our 60-10 all get oversold. All right. At that point, we're probably right at that point. Now, that's not necessarily a trade for me. I prefer putting out what's called a super signal. Now, I know that a super signal requires 2 things to happen. It requires me to have multiple indicators. It requires the quad rotation to happen, all right? But it also requires a divergence to happen too. So that's why I call it the quad divergence. It means I would like to get a low, a lower low, a low, and a higher low. This was not one. This was not one. And, not every trade, I don't need to be in the markets every single minute of the thing. If it doesn't give me a trade, I'm not taking it. I'm just so comfortable and confident in something that works that I'm at the point now that I know it's a waste of time to do something other than that. Or I could just, or if I am going to do it, then I consider myself like, all right, I'm doing this. It's a gamble. I'm bored. I want to play the game and do what everyone else is doing and stuff like that. But what keeps me busy is just identifying these channels. So again, we had a low here, 1, 2, 3, and then you could just see that once you got that 1, 2, 3 channel, it tends to stay within that range. Even when we came back down here, and this is not something that I'm looking for, except there is a divergence right here. Now, this is kind of just a little bit more advanced because we're talking about candlesticks. This area right here. So if I have this channel and I'm extended out there and I know that I have overbought, 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 and overbought and up against a trend line, all right, because we had that 1, 2, 3 channel line. All right, from that point on. And we're up here. But the most important thing is whenever I get to that quad rotation and we're inside of a channel line, I'm looking for a pullback. I'm looking for a pullback. If I see that pullback, this is what I call, and I'm trying to get this across to everyone. This is what's called my environment. If I was a hunter and hunting these things, these divergences show up at this point in a chart. They'll be in a rising channel. They'll be in the top part of the channel. You'll be oversold. You'll pull back a little, move a little bit higher to where you're not, this is, like I said, this is a little more difficult because of what I call a closing price or that high divergence. It's just everything is equal except the stochastics are not equal. When we talk about a pure divergence, typically we're looking at, something more like a low, lower low, a low, higher low. But this is actually a very good divergence because it's a high with a lower high and a high with an equal high. So if I have an equal divergence like this on an upper trend line, that's my signal. I take that trade right away. And I put a stop in here about a tick higher than that, whatever the highest candle tail is. I just put that's the only time I use the tail is if it does give me a better place to put a stop. So I'll put my stop right there. All right. And what'll happen is I'll let this play out and I'll kind of manage it, but I'm watching this. I'm watching this rotation. And as I get down to that 80 line, it's probably right around the 20 period moving average, right around the 20 line here, everything lining up right here. Just as we're just approaching that, I'll take profits. Now, it might not be a lot. It might be, depending on where I get in, I should have a pretty good entry, but whatever it is, that's what it's meant to be. A bigger divergence will give me a bigger move. I can't even deal with this pullback because most likely you might have a bad entry here. And most people will say, well, I want to put my target down here. That way it guarantees me $100 on this trade. I want to get it. No, that's not how the market's not just handing out money like that just because you want it there. It's gonna mess up everyone's plans. You're gonna get shaken out here because you think you're in the channel and then it's gonna drop back down. It's really, you have to have a system that works and you have to apply it like you've never applied anything else, because if it works, you gotta you have to trust in it. You can't just stray from something that works. Sometimes it's going to give you a bigger move, but there's a reason why this gets oversold, and then you get a small rotation back up. Then you had a breakdown and finally came back down. And once we start to identify that, the market continues to kind of give us these rotations. I mean, remember, if we're in a downtrending market, I'm looking at more of our rotations down here. And once we get down there, I'm just measuring this down. There's nothing really there. I might not trade that. I might not trade that. Again, what I'm doing during the day is I'm also looking at charts. I'm looking at stocks. I'm doing my research, and I'm managing these trades if we get into them, or at least looking for them. Here we had a low. I'm watching. Anytime we get a low, I'm also watching for that divergence. So here we have a divergence. It's a low with a higher low, and it takes off. So let's be realistic and say you're not going to get in any better. Maybe you're getting in here. Let's be realistic. Most people are going to chase. All right. You're not going to start to, what I want you to do is start to realize, hey, we're in the environment for a divergence. We had a low, it's pulling back. I want to look for that pop. You should be able to maybe get in at the beginning of that candle. Either way, you're still going to have a lot of rotation here. And then in this case, you kind of went much higher, than this. I mean, that's not a big trade. You had this much better, but this is also typical, this is also in this environment right now. These are big points. This is 65 to 75. That's a 10-point move right here. This is a 5-point move here. A year ago, you'll be, actually dying to get 10 points on a candle like this. So you're going to get faster rotations now. It's more volatile. You have to be a little bit safer and stuff. I would prefer to hold on to this. But like I said, most likely on the occasion that does get some follow through, most likely the market will, give you that bounce. If you have and once you get overbought, it'll come right back on you. This is, if I identify what we were just talking about before, a downtrending market, I'm waiting for a quad, which everything is oversold here. And now what I'm waiting for is that divergence. Now I'm always watching the bottom. I'm watching that low and I'm watching that higher low versus the price here. But what happens is you get in here. Now this is the genius of this. because you're trading alongside in a downtrending market, it's probably not the best thing in the world, but you decide to go anyway because you're jonesing the trade and you have some FOMO and you think it's going to go. But what's happened is you see the rotation here and you see the 60-10. You said, how do I know the trade's not going to work out? Well, if your 60-10 is embedded and your 9-3 rotates, you're just going to come right back down. That is our 2020 bear flag. And why is it 2020? Well, I'll tell you why. You have the 20-period moving average. We're going to be underneath it. Typically, we trade up to the 20 before turning over. This 60-10 has to be under 20. So if this is under 20, the price is under 20, and this hits 80, that's our 2020 bear flag. That's the only combination right there, right here. It is what it is. It doesn't show up for any reason other than short-term momentum in a long trend downtrend. This is embedded. Every time this is embedded down here, if it's under 10, it's really, really weak. You short each of these 9-3 rotations. It is shooting fish in a barrel. it is. But you have to be, conscious of that happening. This is, again, a tough thing to wait for, because you think, well, I'm going to get in here. I'm going to get out here. Nah, I don't believe that trader's going to do that. Some people can. You could go to lunch and come back and have a nice profit. Or maybe your time frame is different. Maybe you're trading the 60-minute time frame. That's fine. But for 1 minute, I guarantee you that if you take it off on the 9-3, you're going to have better success than putting a trailing stop in and seeing if you get anything more. 9 times out of 10, my trailing stop gets hit. And it always, even if it's a break-even trailing stop, it will come back down to the break even. I will give up the profit I had. So I can't add that profit I had, which would have added on, because all these will give me a little profit if I take it off and not worry about what it could give me, but I take it off for what it will give me. These might not be exciting trades, but believe it or not, you get 5 to 6 points on this. And what happens is, and I know you probably, a lot of your traders use prop accounts and stuff. You trade this consistently, you'll start to qualify in your prop accounts. And then you get to scale. You scale up on, if you could do this with 1 or 2, 3 MES contracts and be very safe about it and start to feel it. When you have a great setup, you could always, what becomes what I call a $50 trade, trading for $50 bills and trying to get 4 or 5 of those a day, and just very low stress trades. They're not hard to do. You just have to be in the market at the right time and you have to be there. Not everyone's there like I am. But if you could, do that for a while, it's only a matter of putting some more contracts on before that $50 trade turns into a $500 trade. There's no reason why this trade right here, who makes you $50, can't make you $500 just by putting an extra zero on your contracts. That's the beauty of this, and then again, we come down to this level. I'm always channeling, if I see pivots, I'm putting pivots in, and I'm always looking down for these lows and the higher lows. And once we have those inside the channels, they're going to be great. I wasn't here today in the market, so I'm just going to go today and take a look at today's thing here. I think I left my office at 11:30. So we were trading this. All right. So this was 10:40. I think this was our big level today. There was actually a little divergence here. It was a quad divergence. You can see that angle of that trade. You see how it says 17.6 there? Even though I prefer to have a divergence, the first low to be underneath the 20 line, the second low to be above it, it's more important to have a steep line that's above 20-degree angle between the low and the higher low. I'm just a stats guy, that's just, again, some nerd stuff. Not really paying that much attention to it, but the bigger the angle, the stronger the move. Again, not paying attention to the candle wicks, you're paying attention to the closing candle bar, the bodies, not even the closing, but the low of the bodies. And if that's lined up and you're on a lower trend line, there's probably another big trend line back here from something, I don't know. It just was, there were multiple channel lines here, and it was a divergence. So once you have that, you get that big move. And again, that big move brought us up to here. All right. So that would be a trade that probably pretty easy. We'll give it the benefit of the doubt that we get at the worst position, 53, but, and you get out 66. That's a 13-point move. That's a 13-point move. That's just getting a little meat off the bone and being realistic about it. 13 points.
How would you have known when to get out? Is it based on the trend line or based on the stochastic? Okay.
This right here, this is telling you why to get out. And you're getting out. I have a rule. You'll get this in the PowerPoint. If you're trading underneath, the rule is, if you're trading underneath the 200 period moving average in the VWAP at any point, and you take a long, you want to sell it on the 9-3 rotation. If you're trading above the the VWAP in the 200 period moving average, and you get a trade, and most likely your 60 period is going to be moving higher, so your bigger trend is going to be higher. So if I'm underneath this, I know, and I feel like we're in a downtrend, which we probably are if we're underneath the 200 period moving average. The odds are that we're going to turn over. I'm not going to be tell you I want to know exactly the level, but I know exactly the level I'm getting out of. I know that's going to guarantee me locking in my money there. I'm not worried about this extra money. I'm worried about the consistency. Or about the discipline of being there, understanding the setup, getting in and getting out of that setup. Because there'll always be another setup. That's the beauty of this. The beauty of it is like the hard part, and again, I can't stress this enough, is what you're going to do between here and watching this market rally. Now, here we have a situation, I like remember we said, if we have a nice little rally, we want to buy the rotations back. This one, we never really got this was our only rotation back right here. That was our only flag in a strong trend market here. That 9-3 rotation, if this is above 85, that represents our flag. So that's our flag. And again, you would buy into the flag. You'd buy into that 20 line. If this is above the 80 and this comes down to 20, you buy as it's coming. It's that way you're buying down here. You don't want to ever buy a flag as it's breaking out. I don't know if people tell people about breakout. That's such a trap because you're not going to deal with this pullback, especially in this market, which just could be 10 points. So as you see, this is embedded. You're in a strong trend way above the 2200, and this is above the 85 area. 88, 90, the higher the better. You buy these two situations. When the 9-3 hits the 20, you're buying as it goes into it. All right, because this is very strong and this has no place to go but up because the bigger trend is going to pull it right up and it's going to pop. It might come back after and do its thing, but we're trading this setup right here. That we're trading that moment from this level to this level, from that 9-3 rotation up to the 80 level. That tells us to get the hell out of Dodge right at that point. Remember, I'm getting out right there because my 9-3 got up there. I don't have to deal with this pullback. Maybe I'm in here. Maybe I'm not in a good point, but this is going to guarantee me profits, and I can always scale my profits. If this is not, as long as you kind of understand, buy into that weakness, this only sets up like this. I mean, this is not going to be hard to identify after you do it a few times. It's not. You're gonna start to see it. The beauty of this problem is you're gonna have to adjust your life to be able to be in front of this. Or here goes my thing. So this was a big thing for me. I said, God, no one could sit around and wait for these setups, So what I did is I said, well, I want to get this signal out to everyone. So I developed an app, a walkie-talkie, the Futures Trade Alert Network. So if I see this setup, I push the button and it goes out to everyone on their phone. That way they don't have to be at the computers right away. But that is money in the bank when you get that. That is worth its weight in gold. And I told you, I said offer it to your subscribers because I love them so much. And you guys, I have it for. I'll give you the information, but it's dirt cheap. It's $20 a month. I don't know, and you don't even have to, just try it out. See if your setup's to time up with mine. I kind of rotate these out. I'll tell you when that quad rotation setting up. I tell you where that super signal is, and there's probably about I trade about 5 to 6, maybe 7 setups a day. But these are the areas you want to be in. You want to be able to be in a recognizable pattern, a pullback, a quad rotation inside of a channel. I want to know each time that this is set up. So this is another setup. When we have what we call a 1, 2, 3 channel, all right? So we had a high up here. We have a pivot, and we have a bounce. From at that point, I'm probably throwing in my trend line. And even if we come down through it, you notice I don't change it. I kind of keep it originally where I normally see it in the beginning. because it's going to always be a little bit sloppy in that area. But once we get a push back up, all I'm doing is I'm waiting for what's called a trend line quad or quad trend line. It's when all four stochastics are oversold and we're on a trend line. All right. It happens there. And then we balance it. We come back to that trend line right here. And here we have another quad rotation. All right. Quad rotation trend line, big bounce. Rotation off. All right. Big bounce. Rotation off. Look at that. Where did it go from there? Down. Where did it go from there? Down. This works if you have the discipline, if you could be in front of these things really well. Now that seems too pretty, right? That seems like that's the ultimate perfect setup. Does that break down? Yeah, I'm not saying that you need to trade at 4:00 in the afternoon, but right at the close, or trade at FOMC rate decision or a jobs report or anything like that. These things will eventually run into bumps and stuff. But if you have a good, easy to trade market and you have these clean signals, especially like I said, I'm from New York and I trade the U.S. markets. I love trading the overnight markets. I sometimes trade to 2 a.m, let the Asian markets open up, because the setups overnight are not as, I think they're easier to spot, and they're just let me see here, like here, it's just the same thing, I'm still looking for my channels. I'll start to identify a channel overnight, and then you will start to see these divergences. And once you start to all right, 1, 2, I'll start to see that, and I'll say, oh, double top here. What's going on here? And then, maybe now that I wouldn't probably taken that, but there's a little divergence here on the rotation. They'll pop like mushrooms. You'll just start seeing them all over the place if you start to understand what you're looking for on these time frames. And remember that this works on everything. Works on Bitcoin. It works on, gold, futures, Forex. It's all about, it's really science and math of multiple time frames, setting up.
So we'll let people comment below and let us know the questions, and hopefully you can maybe come back and address the questions, or you also be active in the comments. That would be awesome. But tell me what people can find you and connect with you, and kind of what they can learn from you.
I do a show every single day. I broadcast. This is what I do every day. I trade the markets live, and I trade futures. And we have a nice community of traders. It's DayTraderRockstar.com. And I do a lot of trading overnight too. We have actually a lot of people from Europe tune in, New Zealand, Australia, because I do, like we were just talking about, overnight hour. Specialized in stocks, options, and futures, S&P futures. But I'm a teacher. I've made my way in the markets, and I love teaching. I love having people reach their goals and their dreams. You inspire me too. At the end, what you're doing, traveling around, doing your thing. I think everyone wants to do that in their life, and they need a path to get. They need something to help them get there. And the hardest thing that I found as a beginner trader back in '92 is I had no one. I was all over the place, and it was probably a good 10 years before I really understood anything in the markets. That the simplicity of it really comes down to the simplicity of the market, and don't overthink things. And buy into fear, sell into profits. The easiest things in the world are the things that we don't pay attention to. And that's why I stress discipline so much. I stress the importance of the psychology of a trader and how important that is to be successful in anything you do. It's just, that's the key. I could show you where these are. You could be great at this. It's not that hard to do. It's just that you have to have your ducks lined up. You got to have your business plan. You have to have a team, take this serious, So I love people trading with us. We have a big trading community. If you want to trade during the day, big fans of Etienne, I welcome you. Just, welcome you guys in. Appreciate it.
Awesome. I mean, it's just funny. I had someone see comment on your video, the interview we did last time, said something about like, oh yeah, you're just showing setup in like retrospect, and it's easy to look back at the charts and show setups, but you're actually doing this live like every single day. So people can watch you, they can see how you do it every single day live too. It's not always like only on recap. It's really actually like in the market. So it's kind of cool to see that. Plus you're doing this full time. It's your main income. So it's kind of amazing to see that too.
Yeah, no, this is live. This is, you have to, I mean, it works. It's exciting. It's exciting. It takes a different breed of person though. It takes a lot of discipline and patience, and not everyone has that. And that's the sad part. Not people are not going to make it just because of that. And you got to be truthful with it. Your situation. Is your situation, are you going to trade? You're going to trade around your life, or you're going to or you're going to make your life around trading, and that's a big thing. You have to make that decision. And once you do, and you start to put it all together, it'll start coming and slowly build up. And then you scale up. And then then you'll learn, and that's it.
Links will be below. There's a lot of stuff. People can chat to you there directly, and look forward to having you back here again. It's been a lot of fun.
Yeah. Any questions on the, like I said, I want to make it my point to answer some questions on the YouTube this time. I didn't do that in the last time, but I want to do that as an experiment. We'll get this video over, the highest video ever.